Hi, this is Carrie Sparks with Empire Title, your Arizona title gal. Today I am here with Brian Reeve from Neighborhood Loans in Chandler, and we're going to talk about escrow accounts and changes, sometimes up, sometimes down, in your payment. Brian, would you like to take that off?
Thank you. Thank you for the question. This is actually a complicated topic, but I'm going to try to strip it away as much as possible and explain how escrows work. So an escrow account is basically, it's held with the servicer. It's a third-party account. They have to basically have enough money in that account to pay any kind of renewals, insurance, taxes, that sort of thing when they become due. They're also, in this account that they have, they're also required to have a 2-month buffer just in case the assessment of the property changes at all, or maybe there's a claim on an insurance policy and the premium goes up. They want to make sure there's not going to be a deficit at the time that this bill is due. So when we set up an initial escrow account, there are two different main line items for an escrow account. One is property taxes and one is insurance. So with insurance, what happens is we allow the customer to shop whatever they want with their escrow account.
Whenever they want, not just at the beginning of when they purchase or refinance, but anytime during the loan, anybody can do that.
Correct. You can call your insurance carrier, adjust it. It will be adjusted with your servicer. They'll adjust out your account. So I'll give you an example. Let's say, for instance, I do a quote for $1,500 a month. Let's say the deductible is $5,000. We set it up, $1,500 a year. We set up a deductible of $5,000. We pay that initial premium of $1,500 at closing. So we have to have 2 months reserves, right? So we're going to collect 2 months reserves in the escrow. However, by the time your first payment is due, typically you skip a month because you pay your mortgage payment in arrears. So in that example, we have to actually collect the extra months. We'll collect 3 months. So in 12 months, when those become due, we have the 12-month premium that we can pay in full, and we still have the 2-month buffer. Now, the existing servicer by law is required every 6 months to analyze the escrow account to verify that there's not a 2-month buffer. So what will happen is they will credit back any difference, or they will start to charge you any deficit on that when that happens on the insurance. So if you have a claim, a water claim, or maybe you call up your insurance company and change the deductible from $5,000 to $1,000, that will change your premium. That will update your servicer and let them know, hey, you're most likely going to be short with this insurance policy, so you need to collect. So what they'll do is they'll offset your payment, and they will change your payment, because really what you're doing is every single month that you make a payment that there's money allocated for insurance and taxes, it's going into an account that's building up to be able to pay that renewal when it's due in 12 months. So that's how that works. When it comes to property taxes in the state of Arizona, taxes are due 2 times a year, April and October. Same concept applies. They'll do the 2-month buffer because you're skipping a month most likely, depending on when you're closing. That'll adjust. Sometimes your escrow account will be higher if by the time that you're closing is within 45 days of the April or October. Sometimes you'll see them pay more. And they'll also, through an aggregate adjustment for a customer on a buy, will also collect from the seller the amount of taxes that are owed from the time that they were in the house, because with taxes you're paying actually the semi-annual from the year before. So when you move into the house, what's due in April has been basically the last 6 months of taxes that
You're
are
right.
owed.
It sounds complicated,
Yeah,
Brian.
so there's going to be prorations there. Overall, what you're going to see also in refinance situations is that there's an existing escrow account. We're reestablishing escrows. When you pay off that existing mortgage, a lot of lenders will pay them out a check after they've been paid off, what's in that escrow account. Unless you're using the existing company, then they will net your escrows, and they will actually allocate that money over to the new escrow account to reduce some of the impacts of closing costs. One piece I wanted to add to this is what has been adding to the market, and a lot of people have been going kind of crazy, especially with all these new builds, is that when we're doing a new build, we're required to use a factor based on a county of what we potentially see the taxes most likely going to be. When you are buying a house, chances are it's on unassessed, not fully assessed, improved taxes. So the taxes are very, very low. So what we have to do is we have to actually guesstimate or a factor of what those taxes are going to be when the county assessor comes out. And when they set that, then you'll see your payment adjust. So it could be 6 months, it could be a year when you're buying it. So sometimes you'll see it go down. In Pinal County, you'll notice that when the county assessor comes out, a lot of times their payment is dropping because the county assessor is assessing those taxes lower than what the lender may use for the qualification. So, or what they're collecting in
What
escrows.
homeowner wouldn't want that?
Yeah, so that definitely impacts. So a lot of times when people are buying a new build and they're setting up their payment and they're projecting their payment, a lot of times it's higher than what it actually will be when the county assessor goes out.
Good information today. I know that it's complicated, and that's why you want to talk to somebody who is a professional, such as yourself, Brian, and get really it stripped down to like, why is this happening? Get the explanation on each individual situation. There's no cookie cutter here at all. And how can they get a hold of you, Brian?
602-741-4801. Thank you.